Yo, what's going on, guys? How you doing? Ginger, the short man. This guy's been crushing it. What's up, Optimus, Gervais, Yash, Ricky, Andrew? What's going on, boys? Let's get right into it. Obviously, follow through from yesterday. Market's been really, really weak, especially with those comments from Powell. I told you guys yesterday I turned pretty bearish yesterday. Why did I turn bearish? Just because the Fed has completely changed their policy now. They've been saying inflation is transitory. You guys have seen it. You guys gone to the grocery store. You've seen the gas prices. You've seen prices of regular stuff you buy every day going up. He said it was only going to last for a little while. Now he's saying he doesn't know how long it's going to last. So obviously that's a huge thing. What's up, Nils? Last time we had inflation run like this was the last market crash. I'm not saying we're going to crash this time. It's just the market is very, very extended. Like I showed you on the monthly and the weekly time frames yesterday, we were straight up in a line basically. Like look at this. This is parabolic. This looks like a penny stock on the monthly. And we are in need of some pullback. And that coupled with the Fed not knowing what's going on, coupled with the new strain of coronavirus, coupled with Fed just printing money and bringing the US dollar value down. That's why I was very, very bearish yesterday. Obviously, I was going to, if it was bullish this morning, I did play bullish. I took Amazon calls, I took Rivian calls. But when the market flipped, we were ready. We sold both those calls for profits and we jumped short. So congrats to everyone. Goldman Sachs, Platinum Sachs was just absolutely on fire today. Anything you followed from him, he crushed. Ricky crushed a bunch of plays. T crushed a bunch of plays. T's Twitter overnight almost went 100%. So any admin you follow, if you guys are taking trades on your own and you don't know how to manage them properly, we can't really help you, right? But most of the plays that we've called out in the last little while have been working. So just if you didn't have a good day today, just stay patient. It's not all about today. Don't try to get all your money back tomorrow either. Just wait, be patient, wait for the right setup. And right now we close the daily on SPY under the 50-day moving average for the first time since September 20th. So September, October, November, December. Almost more than 3 months ago was the last time we closed under the 50-day. And before September, we had never closed since March. So since March, we've closed under the 50-day on SPY 2 times. What's up, Amelia? How you doing, Nils? And this is the second time we closed under the 50-day. So obviously we have to look at the pattern. Last time we closed under the 50-day, we didn't get back above the 50-day for about 3 weeks. So it took 3 weeks of chop under the 50-day moving average before we got back above it and started running again. So very similar scenario back here in March. If you guys look, we broke underneath it. Oh, this is last October. Where's March? Right here. That's September. Jesus. So in March, it only took 1 day to get back up. That's very possible. In last October, it took a week to get back over. And last September, it took about a week to get back over as well. So those patterns, so either we rebound tomorrow. Basically what that pattern tells me is either we rebound tomorrow and rip and close back above the 50-day, or we have some more chop underneath the 50-day before we reclaim it. Yeah, Santa Rally does not look like it's coming this time. On the daily, if you start looking at these, stochastics are going near the bottom, but we have not bottomed out on the stochastics yet. The RSI is still not oversold on the daily. If you zoom out to the weekly, it's even worse picture. Why do I say worse? RSI is still way up there. Look at RSI is almost overbought on the weekly. Stochastics are still way over there. They just started curling down right now. So there could be potential for a lot of downside movement here. I hate being like so bearish, but I said the same thing yesterday, and that's why I was ready to short today, right? On the first sign of weakness, we just jumped in puts. You shouldn't have a bias. Like Goldman said, you shouldn't have a bias. I'm only going to go long, I'm only going to go short. But if you're prepared for something that could happen, it could help you get in that position quicker and make money quicker. So yesterday, I was very bearish on the post market. And I hope you guys caught some puts with us today. Here is QQQ. So we broke November 10th low. I told you November 10th low is very important, which is 387.53. Today's low is 386. So we closed below November 10th low on QQQ. It's still not at the 50-day moving average. Why is QQQ way above the 50-day and SPY is already at the 50-day or under the 50-day, sorry? Because QQQ is the strongest sector. XLF was weighing on SPY. That's why we closed. Look how weak XLF is. We had this equilibrium, broke to the downside, little fake dead cat bounce, and just broke to the downside. XLF is about to go to the 200-day moving average, which is at 36.85. 36.85 200-day moving average on XLF, so watch for that number. Other than that, it's the weakest sector other than IWM. IWM is way below its 200-day moving average. 200-day moving average on IWM is 223, and we are at 213. This is absolutely insane. I've never seen this on an index, and I've been trading a long time. What's up, Saab? How you doing? I've been trading a long time, and this breakout here was a perfect breakout, almost like increased volume, low selling volume, and right at the top, we just sold off completely. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 17, 18 straight days down. None of these days closed above the day before. I've never seen that on an index ever, and that's saying something because I watch the charts a lot. So if you zoom out to the weekly and the monthly on IWM, we are just right back in that range, and we're almost at the bottom of the range actually. If you wanted to play a bounce, IWM's so beat up, oversold bounce on IWM might work. I wouldn't even draw the line like this. You can draw it differently here. So this is a monthly or weekly chart of IWM. Could even draw the trend line like that. You could say we're at support on IWM. If you expect a bounce, which means Friday we should close above this trend line, it's worth it to take a shot. Look at the RSI is down, stochastics are coming down, even the weekly. Look at the daily. Oversold, and stochastics are ready to bounce. When was the last time stochastics have been like this on IWM? Was September. So September we had stochastics down here, and look at that bounce. Look at this 4-day bounce. Stochastics down here, 4-day bounce. Stochastics down here, 4-day bounce. So IWM might be worth a shot at the end of this week. If we stay above this trend line, IWM might reverse and have a few green days. I'm not saying it's going to go back to all-time highs. I'm just saying a dead cat bounce and then lower, most likely, just after it cools off everything. I'm not bullish yet. Here's the VIX. Why am I not bullish? VIX is through 29. Remember what I said yesterday on the post market? I said if VIX gets over 29, this market's going to drop. I would say that that's a drop. So yeah, VIX is over 29. Very volatile out there. It's not for the faint of hearts. It's not for new traders. I feel bad for the retail traders out there. I will do Apple at then, bro. And we're over 29 here. So what's the next step for VIX? Let's see where it goes. It's over my resistance. The only next resistance is way up here. Let's see where it is. Next resistance on VIX would be 37. Imagine if we got to 37 on the VIX. If the VIX gets back under 29 and comes back towards 24 and 17, then the market can rally again. But as long as it's over 29, the market's not going to rally. Everything's going to be a short the rip kind of market. And I expect that into the end of the year. ES just broke every single support and resistance I have, closed below the 50-day moving average. 200 days way down at 42.92, and that's going to be a mess if we get down there. AMD short this morning. Semiconductors were just too inflated. They just went too far. It was just dangling on the 8-day moving average this whole ride up, and then today we finally got underneath it, shorted around 155, covered almost all of it in the money at 150. Who would have guessed a $5 dropped on AMD? And I think we shorted it right around here. So we were even late to the party. We could have shorted it like at 160, but we shorted it at 155, and we still got a $5 move out of it. So just like you don't want to chase bullish opportunities, you don't want to chase shorting opportunities, but this one obviously worked out for us. It was a very weak market. Everything was lining up. Semiconductors are just, they're too far. Like, look at this run. It's been running since the breakout of this wedge at $105. 105 all the way to 165. So 60-point move. On a stock, it obviously has to consolidate eventually. Even though I love AMD, it's a solid company. It's going to be very successful in the future. Look at the weekly on this. Straight up in a line. Bucky knows what I'm talking about. And I expect the weekly to come down and test the 8-day moving average, which is at 139. So if next time, I'm going to roll those puts, obviously. Made well over 100% on them. It went like 250 to 8 or something. So I made money on those. I'm going to take that profit, or most of the profit, and I'm going to put it into more puts for farther out on AMD. Or maybe even next week's again. Just because we have so much time. We got a 5-point move today. Like, why can't we get a 5-point move tomorrow? So 139 target on AMD puts. SE got smashed. We're under the 200-day on the daily. We're under the 50-day on the weekly. And now you have to start thinking about where would you like SE shares. This company is going to be around a long time. It's a great, great company. If you want to wait and be very patient, I would put a limit order in for 106. If this market gets really bad, that's where you want to pick up shares for SE. If they start to figure out inflation and coronavirus and stuff gets better, then you can go on the daily chart and you can start looking for supports here. But other than that, I would wait on adding equity unless you have a very tight risk entry. I have net here, Kumar. I'll show you guys something. So yeah, other than that, just start. If you guys don't like shorting, if you're not trading every single day, start looking at these charts. Start figuring out levels where you like to buy equity, like way down. I'm talking like these pullbacks can be a long time. Not today, not tomorrow, not this week. Maybe next week, 2 weeks, 3 weeks down the line, you can start grabbing some equity if it's pulled back enough. But don't just randomly buy it. Buy a little bit at a time and buy it at support points. So SE, you can buy it at $200. And if you want to be really patient and wait for 106, you can wait. I doubt it gets to 106, but 200, I think it gets down there, especially if the market gets really bad like I think it will. So one thing I want to show you about the Microsoft puts I bought here. Big run up, big reversal date on candle on the daily, came down, bear flagged, and now we're waiting for the breakdown, right? Why do I wait? Why would I wait till the breakdown if I could just get it at resistance? So we bought it like almost near the high, I think, today. I'm pretty sure. I think we bought it right here-ish. When it went up, it rejected my trend line. I wasn't watching it at the time. I seen it back here, so I bought those puts for 4. Those puts were 8, almost 8 at the close. The ask was 8, so a double on Microsoft as well. Why did I want to show you this chart though? Look how similar this chart is. So puts worked on this chart, right? This is the exact same chart as net. Exact same. Look, ran up. Daily candle said it's exhausted. Let me get rid of these. Daily candle said it's exhausted. Came down, bear flagged, and broke the bear flag down. Today, net was down $24. If you had net puts today, weeklies, you would have gotten paid like 8, 9x probably. So net under the 50-day. Microsoft looks to be making the same move. Let's see if it breaks down. Dawkins, complete trash too. Like this was a big runner, right? Like just straight up every single day. And now finally get a pullback, look at this. This was just a bear flag. Remember we were long? We made money long on this bear flag, which looking back is the wrong play. But if you just look at it, it's the exact same thing I teach you guys every time. It's the same thing, bull flag, bear flag. It's the exact same thing, right? So why do I, here, I'll show you guys 1 second. That's just a flag upside down, guys. It's the exact same play, just flip your chart over. So big down move, consolidation above the 50-day moving average, rejected the above moving averages and broke down. This is actually a perfect short play on Dawkins. If you guys see a chart like this, let me know. Big run up, big dump down, consolidation because it couldn't break the 50-day right away. And then it rejected the 8 and 21 to the upper and then just destroyed downside, 13% down today. So let's find plays like that. Let's find plays like net. Let's find plays like Microsoft. Amazon here, the daily's still not even that bad on Amazon. Just other than big tech, it does look kind of like a head and shoulders is forming. So remember I took off my puts at the end of the day. Why did I do that? We were down a lot today. Like the market doesn't usually go down that much, right? So if we do bounce tomorrow, what do we get? We get a beautiful short opportunity on Amazon. Just beautiful. So if we get a bounce tomorrow, try to catch, I'm going to try to catch Amazon's shoulder, the high, and I'm going to try to catch puts in it. This is a very bearish pattern. If we get that bounce, if we just break right through, then I mean we're going to get oversold and there's going to be a bigger bounce. So let's see if we get a bounce tomorrow on Amazon. What I'm looking for is a little oversold bounce here. We short right here at the top and then we roll over. Or even if we don't roll over, we'll come back down and test this neckline. And then we can cover our puts and we can even go long if there's strength in it. So that's what I'm watching for Amazon there. Tesla just absolutely terrible. This is in no man's land. I wanted to take puts on Tesla today as well, but we're just in the middle of the wedge. I want to see what it does at the, if I caught it at the high of the day today, maybe I could have, but I really wanted to touch that wedge. I wanted a perfect setup. I didn't get it. No big deal. Down 50 points today. Held the 21-day moving average though. So Tesla, wait till it gets to one of the lines. If it gets to the bottom line here, straight in a line, maybe we get oversold. like the hourly stochastics are almost down there. RSI hourly is down there. So if we get down straight dump to the bottom of the wedge, we can go long here and try to catch a play to the top of the wedge. Why? Because it's going to get oversold. Algos are going to kick in. We're going to buy it and we're going to sell it right at the top of the wedge. So let's see if that play sets up. MQ, this is one reason I wanted. Someone asked me about SQ equity today. Let's go in why I said maybe. The reason is, obviously, I'm bearish on the market. I think we go down more. But I'm not like a very, like, long term. When you're trading as a bear, you have to change kind of your strategy. If you're just a buy and hold guy and you're buying equity, you can buy a little bit of equity at major supports. But the thing with me is, like, MQ yesterday, I bought it off this support. I bought it at like 20 bucks and my stop loss was under 1966. So I had about 40 cents of risk. If I was wrong, I lost 40 cents a stock. If I was right, I gained about $7 or $8 a stock, right? Even if we got to this resistance, I'd gain $7 a stock. So that's what my thing is. If I bought even one share, if I'm wrong about the play, I lose 40 cents. If I'm right about the play, I gain $8. So that's a good risk to reward kind of thing. And I use that with hard stops. So the play on SQ basically is what I'm saying. You guys have seen these. So let's just go to the weekly to make it clear. I love trading these ranges. I love buying the bottom, selling the top, buying the bottom, selling the top. But this time, the Fed policy change and all that stuff. Obviously, these weekly ranges stand for a reason. The market's been through a lot of hard times during this range that it's been in. And the support's held every time. So if you're a long-term equity investor and you really like Square, I would start buying a little bit here. I would buy a little bit here. I'd put my stop loss under 192. If you're a real long-term investor like Warren Buffett, I would DCA in a little bit here. If it went down, I'd DCA in a little bit more. Where you think is support, around 160-ish. And then even some more if you want. Just keep buying it until it stops. Because like SQ solid company, if you really, really like it, if you know all the fundamentals, everything about it, and you're just a long-term equity holder, there's no problem with buying here. I mean, you're buying 100 points off the highs. So let's see what happens. Don't get too bearish or too bullish. I am personally thinking we come down more. But in a bear market, there's a lot of wicked bounces. A lot of people won't be able to hold their shorts through those wicked bounces. I know because even I have time. If I have size in a trade and we're bouncing, it's very hard for me to hold those bearish positions. So thank you guys for attending. I'll see you guys tomorrow.